most of you do here, wait for confirmations, wait for trade confirmations before taking a trade, wait for confirmations before getting to the trade, wait for confirmations at entry zone before taking a trade. And basically, most of you don't know what this confirmation is. So what are these confirmations? In today's video, we're talking about trade confirmations. What are these confirmations we do talk about before taking a trade? But before we get started, if you're new to this channel, please do it to smash the subscribe button and turn on the notification bell so you get notified whenever I post a new video. And to my returning viewers, I really appreciate you guys. You guys are really contributing to the growth of this channel. Let's keep doing what we do, guys. So let's get to it. So trade confirmations can be really helpful. Like, they play a big role in your trade entries. Most of you all do it getting to the trade without knowing if the trade will actually go your way, without knowing if the trade has chances or probability of going your way. But with the help of confirmations, like seeing some certain patterns, some certain formations on your entry level before taking a trade would really help you, or would give you an edge in the market, and would help you filter your losses, and you will see most of your trade going your way because you waited for the confirmation of the trade, you waited for the confirmation on trade level before getting into the trade. You didn't just get into the trade without confirming if the trade has the probability of going your way. And we're on BTC USD chart on the 4-hour time frame. So for example, we want to trade the resistance level at this point. For example, we want to trade this resistance level. This is a resistance level basically. We have seen the market reacting to this level, this zone, and you can see this level once acted as a support at this point, at this zone. We got the breakout of this level, like the break below this level. Price came back to test this level. So let's say we want to take a sell at this zone, and we don't really know if the trade will sell from this zone. We don't really know if the market will go against us or if there will be a continuation to the upside. So like, our interest is to sell on this our resistance level. We have to wait for confirmation. So what are these confirmations? A confirmation can actually be a pattern formation, either a reversal pattern or a candlestick rejection. So how it identify this confirmation in the chart? So you can see at this point, let's say you want to sell from this zone, let's say you want to short this market from here, like this is our resistance level, and we are not really sure if the market is to go our way. We want to wait for confirmations before taking our shorts or our sells. One of the confirmations to consider before taking a trade is a reversal pattern or an exhaustion of market approach to that level, or a candlestick weak or rejection. Like at this point, we can see we got a candlestick pattern at this particular zone. You can see this particular candlestick, this pin bar is really a nice rejection candle, is really a nice reversal candle, and you can see there was no wick basically at the closure of this candle. Like, there was no wick at the closure of this candle, and you can see how the market reacted from that zone. You can see how the market gave us a push from this zone after this candlestick formation, after this pin bar that we got at this zone that had no wick. Like, it had no wick at the open, and we can see the rejection that we got on it. Like, the market put the upside and rejected. So getting to the trade on this candlestick formation would increase your chances of the trade going your way. So let's say you took the trade on the closure of this candle. Let's say you took the trade on the closure of this candle, and your stop loss would be above the wick. Let's say you took your entry, you took the trade at this point, and let's say, like, yes, you just got into the trade. You have seen your market formations, you have seen your levels, and you are sure, or you have taken note of the place you want to sell off from. Or you have taken note of the place you want to take your sales from. Now you're waiting up for confirmations. Let's say you took the sales on this weak rejection, on this candlestick pattern formation, and now our stop loss is above the wick, and you can see the pin bar formation that we got, which is a nice reversal candlestick pattern, a nice reversal candlestick formation. Our target level will be maybe at this point, like the swing low of the market at this zone. Let's say you took the sales, and our target is here. I can see definitely the market went your way because you got in with a candlestick pattern. Okay, so this is the number one formation. What if you didn't see any candlestick formation and you're looking up for other confirmations? So which other confirmations will you consider? Which other confirmations will you watch out for? You can see we have a reversal pattern. This is the left shoulder here, and the head. You can see the head formation at this point. Then you can see the right shoulder formation. You can see the market sold off, gave us a retest, then a continuation to the downside. So this is another confirmation that we take note of before getting to the trade. A reversal pattern, a candlestick rejection on a zone, and you can see we got one at this point. We have seen the candlestick pattern entry confirmation, and you have seen how the trade played out from the candlestick formation. Right now, I want to make use of the reversal pattern. We got a test of our resistance level. Let's say we didn't get to enter the trade at this point, like at this candlestick rejection. Let's say, okay, we are not looking out for another confirmation, which is a reversal pattern. Like, we want to be sure that the market will sell. Like, we want to be sure that the market will go our way because we're looking out for sales. So we're looking out for a reversal pattern, like an inverted head and shoulders pattern or a double top formation. And we got a head and shoulders pattern, not an inverted head and shoulders pattern, my bad. So you can see we got a left shoulder here, a head and a right shoulder. We can see how the market played after this formation. We can see how the market gave us a breakout of this level. Then let's say we got into a trade at this point. Let's say we took our sales at this particular zone. Maybe you can see the market closed below this level, gave us a retest. The market closed below this level and gave us a retest of this zone. You can see the retest, the candlestick retest at this our level. We got this breakout. We got the breakout at this point. Then you can see there was a retest. After the breakout, you got the retest with this candlestick rejection. So we're entering on the break and close below this our structure. So we got into the trade basically. So let's say we took our sales on the rejection, then at the opening of the fresh candle, and our stop loss above this level. Let's see how the trade played out. So you can see how far the trade went. Remember, we are looking out for sell opportunities. So we have seen the market come to our resistance level. We are trying to sell off this resistance level, but we're looking out for confirmations. And the first confirmation we saw is this candlestick pattern formation that we took the sells from, and the trade played out well. Then we are to enter on this next formation, with this next confirmation, which is this head and shoulders pattern. And you can see how the trade played afterwards, after the test of our resistance level. And what was the other confirmation? We can actually use an ascending channel or a rising wedge. So we can see at this point we got this ascending channel, basically also known as a rising wedge. So we can see how the trade played out. Then we have seen the formation of this ascending channel. So we have to wait out for the breakout of this ascending channel, then a retest of it. We got the breakout of this our ascending channel. We got this ascending channel formation, and then a breakout of it. Let's say we have to trade on this level, to take our sales on this level. So we got the breakout with this long candlestick formation. We got the breakout basically at this point. Then we have to wait for a retest of the resistance level or a retest of the trend line. We can see after the retest that we got at this zone, after the retest, after the break of this level, we got the retest. Then you can see how the market sold afterwards. Always waiting for confirmations in trading would really enhance your trading game. Like, it would improve your trading game. Like, you see changes in your game if you have to wait for confirmations of levels before taking a trade. And making use of these confirmations, the candlestick formation, the candlestick wick rejection, the reversal patterns, the rising wedge, like all those patterns, taking note of all these confirmations really improve your games. Before we make use of these confirmations, we have to be sure of a level that you could be expecting a reversal from or a trade move from. Be sure of market reaction on those levels before you get into the trade. So I hope you guys would apply this in your own trading game, your own trading strategy. Whichever way you approach the market, do well to apply this and see how your trading game will change. So thank you guys for staying to the end of the video. So to my new viewers, you guys should do well to hit the subscribe button, and to my returning viewers, a big shout out to you guys. Let's keep doing what we do, guys, and do have a wonderful day. Peace out.